Should we buy or sell CONSOL Energy? First off, read this disclaimer carefully. Here is the website. Fuel the world for a better tomorrow, powering America since 1864. Yeah, here is their website. Nice looking website. You can find them in the other themes. I call it just coal. The stock is 150% from the 52-week low and 27% away from the highs. Here is the long-term chart. Going way back, this stock has a history of interacting rather surgically with the green 50-week moving average. Here it became support. This was an excellent time to buy the stock. 2 weeks in a row now we have tested the green 50-week moving average. We are still above it. I would lean bullish as long as we are above it. Looking at the daily data points, then it gets messy because we are below the red 200 daily moving average. So that's a bit of an issue. It's an issue indeed. If we do look at some of the other indicators, we are at potential RSI support here. The last time we tested this RSI level was back here, which was a very good, very good time to turn bullish on CONSOL Energy. Looking at the daily data points, it's a bit noisy. We are at an interesting level on RSI and PPO from a more bullish perspective, but it's not like a screaming buy. So I write 50 weekly moving average support. That is the entry signal and also a stop loss. I will give the bulls a 4 here on the technicals. It's bullish, but it's not like roaringly bullish, but it's bullish enough. Next, let's look at the seasonality. We don't get data here to the left. We do get the table view though to the right. So far we have a 0.17% gain for February, not spectacular, but generally speaking, February is a bit of a bullish month. March is rather bearish, but there's reason to be a bit optimistic about February. We had little data on February on seasonality more generally, so I will give the bulls a 2 here, but we just don't have enough data. Let's look at the fundamentals. In blue, we have price-book ratio, copper price to sales, green price earnings. There is a support level here on price book. We see that during previous pullbacks, this has been bought by fundamental investors, also price to sale. Yeah, but we're not like at a key historic low. When we look here at the analyst price targets, well, first look at the yield, 7.26%. That's pretty good yield. The analysts' forecasts are really bullish though. The minimum price target is almost 30% above us. Average is 38% above, max is 45%, but we only have 3 analysts with a 1-year price target. The rating among the analysts is strong buy. So this is definitively interesting though. There is something here that will attract those who are into fundamentals. So CONSOL Energy engages in the production of bituminous coal. It focuses on the extraction and preparation of coal in the Appalachian Basin. So overall, I do think that the fundamentals are bullish. I will give the bulls a 5 here, but it could certainly have been better. The deep value setup for CONSOL Energy has passed, and now it's more about getting a bit more. But yeah, overall it's bullish from a fundamental perspective. When it comes to coal ETFs, there are none. Okay, so let's look at some relative performance. We have long-term 37% with S&P 500, 93% with XLE, the energy ETF from Spider, 82% with the dollar index. Short-term correlations, 13% with S&P 500, 35% with energy ETF, and 26% with the dollar index. Hence, what happens with XLE is going to have the biggest effect on CONSOL Energy. So here is the XLE, it's pulled back a bit. Some kind of support at the purple 20-week moving average. Looking at the dailies, yeah, the blue 100-day moving average, that is more interesting as a support level. Historically, it's been pretty relevant, especially back here. So yeah, it's an interesting level. Here you can see some of the seasonality for XLE. Pretty bullish, frankly, to the left. To the right also, it's overall, it's a decent period for the XLE. Let's now compare CONSOL with XLE over here. Like that. And XLE. Okay, start long term. This is a place where, looking at RSI, CONSOL Energy has a bit of a tendency to begin to outperform the XLE. Looking here on the bottom with the blue relationship, it's a bit of a noisy chart. There's been lower highs, but there seems to be some kind of floor being built here at the lows. Maybe that will work out. We are bouncing from a support level on RSI, which means that there's a tendency when this level is touched that CONSOL outperforms so much that we get into more overbought territory. Looking at the seasonality, we have 4.75% outperformance in February for CONSOL Energy. But February is usually a very bullish month for CONSOL Energy. So yeah, this looks interesting. So on relative performance, I will give CONSOL Energy a 5. We do end up with 4 in favor of the bulls. We are at 50 weekly moving average support, and that is the key level. If we were to lose the 50-week moving average in green, it would be bad. Given the data we have now, it shouldn't really be lost. If it's lost, it means that there's fewer bulls than we expect. And those situations can quickly become a bit self-reinforcing, because if the bulls are not willing to buy the 50-week moving average, given the context, then it begs the question, what kind of other level would they be willing to be really confident? And that could be, significantly below the current support level. So yeah, it's very smart to have a stop loss around the entry signal. We have some time left. Let's look at some of the top components of the XLE ETF. ExxonMobil is on the top. Here we soon will get the weekly data points. Yeah, we are at a very high level. So, a lot of gains have already come to the bulls. So, but obviously this is bullish, right? But it's bullish if you are holding an ExxonMobil position. It's not necessarily bullish if you don't. So if you don't have any position on ExxonMobil, what do you do? Do you click buy or sell? Let's look at the daily data points. I mean, let's look at RSI and the PPOs. We are high, pulling back from some bit dangerous levels, but we aren't at extreme levels here on the dailies. Pulling back a bit. Seasonality is decent here to the left, to the right. Overall, the seasonality is okay. Price book it's elevated. Price to sales a bit better. But yeah, I think this is not an especially interesting setup for either bears or bulls. Let's look at Chevron. CEIX. Chevron. Chevron is pulling back a bit. If we were at the green 50-week moving average, that would be a bit more interesting from like a bullish perspective. So we are close to the red 200 daily moving average. The problem is that recently it's been slipping below it, so it's not. Recently, it has lost legitimacy, which means that if we were to test it again, it's not given that bulls will bounce from it. Let's look a bit at the dailies. I mean, there's nothing really like super interesting happening here in the technicals. Seasonality is pretty bullish. To the left or to the right. February usually is a bullish month. So far, we have a bit of a loss. The fundamentals, price to sales is pretty good. Price book also, it's decent. Yeah, let's continue. Here is Schlumberger, weekly data points. Looking way back, you see that this stock is pretty far away from the highs. Pulling back a bit now, I don't like this candlestick back here, this massive upper wick, showing that a lot of people were left holding the bag here on the 24th of January. It was a big reversal day here for the bulls. The chart here is a bit messy. Let's look at price. Yeah, there's nothing really like interesting here with Schlumberger. Then EOG resources. Yeah, pulling back to the green 50-week moving average, and the green 50-week has legitimacy from past interactions. The daily data points. Oh, the red 200 daily moving average. There's been some interaction with that, at least recently. You see here a lot of interaction, a lot of support at that moving average. That's interesting. Fundamental, no, I mean, seasonality is really looking good here to the left, to the right. February is a messy month. It can be very bullish or really bearish. But March is really green though. It's been a few bad months, but overall March is really, really, really bullish. So the seasonality is pretty good for EOG resources. Price book ratio, decent. Price to sales, also decent. Let's look at the analyst price targets. Yield 2.65%. Also, that's okay yield. Oh, analysts are really bullish. So the minimum price target is 9% above us. Average is 26% above. Highest is 41% above. 23 analysts have a strong buy. So this is really, 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 really bullish. So EOG resources at the 200 daily moving average is definitively one to watch here. Maybe even put on a bit of a buy order. This is pretty interesting. Yeah, share price is a bit high, $133. No, 125 if you look at the closing price. Yeah. Okay, so we have looked at CONSOL Energy. I do think that the green 50 weekly moving average is definitively a key support level here. We also looked at some of the components in the XLE ETF. I do think that EOG resources is a very interesting bullish opportunity. The fundamentals, the seasonality, and the chart looked pretty good. A nice clean stop loss level with that 200 daily moving average. What I didn't like is that the 200 daily moving average it has worked as a support level many times now, but it also means that the bears were able to go back there to test. The ideal situation is that you have some support level, it is tested, and then you do see a bit of a clean, self-sustainable, self-reinforcing rally. But in this case, there is something a bit spooky. But overall, it's bullish for EOG resources. But I don't like it when the bulls are not able to recruit new bulls higher up and higher up and higher up. But yeah, so CONSOL Energy, it is in the coal business, but given the current geopolitical situation around energy, all of the talk about the green revolution and all of that, it's a bit on hiatus at the moment. We have bigger concerns, and the current year, 2023, is really going to be quite dramatic when it comes to energy, because what helped out a lot of countries 2022 is that you had energy reserves, but a lot of those reserves have been used. And Russia is a very, very big country. They have a lot of natural resources. So not doing business with that country is going to definitively have a very big effect on what kind of priorities we have to make in the energy space. And another thing now is nuclear energy. So yeah, definitively, 2023 will be a huge year for energy, and maybe a lot of the green stuff will be a bit on break.